In today's video, we're going to talk a little bit about timing factors. And I use both the trading day cycles and I also use a histogram that is done with calendar day cycles, okay, that include the weekend. So sometimes you'll see that something will come in over the weekend, and what you have to look at that, or the way that you look at that is, you know, if it's coming in over the weekend, then you're going to look at maybe Friday through Monday as far as a time window to anticipate a possible reversal. Now, I'm going to tell you that timing doesn't always work, okay? It does often enough that it's worth watching. But let's look at what we have coming up in the next couple of days with this market that is still vulnerable to the downside for a few reasons. You are below the 50 and the 200 simple moving averages. The 5 and 13 crossed back to the downside way up here. That was a big warning. And let's see, and the new bearish pattern, obviously, since that last high was made. Now, as far as timing where we can anticipate a bounce, now the histogram that I ran off of this most recent high is showing me the 25th, 28th as far as you know, time windows or dates to watch for a possible tradable low. Okay, does that mean it's definitely going to happen? No. Does that mean that it's going to happen at this support? No. The timing doesn't tell you where it's going to stop. The timing tells you, you know, the dates where it's more likely to reverse. So it could reverse from here, or it could go down here and reverse from there. Okay, so just try not to get it confused with the price work there. Anyway, so we have those dates coming in the next couple of days, so you want to anticipate a possible reversal. But you don't want to trade it unless you start seeing a pattern shift to higher highs and higher lows. You don't want to step in front of this freight train. The second group of dates actually comes in closer to early next week, where we have, you can see cycles anywhere from the 29th, which is Monday, through November 1st, and we have 1, 2, 3, 4, 5 cycles that come due there. So, you know, these are both the time windows. I would tend to think that the trading days might be more accurate, but either way, we're going to anticipate a possible bounce because we're also closer to extensions where moves tend to terminate. Just don't act on it. Well, first of all, if you do not allow counter trend trades as far as your trading plan is concerned, then don't mess with this at all. But if you do, what you can do is we can look at a lower time frame chart and see if the pattern shifts, and if it does, see if we can set up a pullback for an entry with limited risk that you don't have to take overnight, because this is a very scary market, you know, and go from there. It's probably going to be good for at least you know, a day trade in the next few sessions.